Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's the 12th of December and our regular Monday guest is here with us, Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank and coming out of Singapore. Now, Vishnu, great to have you on the show.
Always good to be here, Brian. Thanks for having me. It's my pleasure to be here as you put it, regular Monday guest.
Now, Vishnu, for a start, all eyes this week really on the US, and it's everything from the US CPI numbers to the FOMC meeting later this week. What is your view on the rate hike scheduled for later this week? Are you still holding to the general consensus of the 50 basis point hike?
Yes, we pretty much are. I mean, to be fair, right after November, our sense was that it would be a 50, not a 75 for December. And I think along the way we were expecting a 75. Markets were going towards 75, but since then there has been some cooling in the CPI numbers. Markets have been settling back at 50, even though this is coming just on the back of slightly higher producer price numbers. So we've got mixed data, including Friday's inflation expectations coming lower. So of course, no matter what you look at, one of it is half full, one is half empty. The bigger point, though, is the Fed is in nowhere near a place where it can do a 25 basis points hike or just pause. They are still in a mode of doing upsized hikes. And I think that's what they are emphasizing. They're emphasizing don't get excited that we are stepping back from 75 to 50, because that was going to happen anyway, given that we've come so far. Instead, they are saying focus on the fact that we have not yet hit the peak. We don't know exactly where there needs to be, though we are getting near. And incoming data will suggest that. And the last point you know what, guys, we need to keep at it, which means we cannot prematurely pause or reverse. They're probably going to try to hold for a while. And that's where I think that kind of language and the dot plot, the so-called dot plot, which is the Fed's forecast of where they see rates, those two elements of the meeting may be what markets may be really be focused on in terms of having to read deeper into it, because the rate hike, that's pretty much a done deal, and I don't think that will raise eyebrows.
Now, turning our attention to China now. China's consumer price index that came out this morning rose 1.6% in November on an annualized basis, while its producer price index fell 1.3. So those are the latest data points that have just come out of China. But all eyes are also on the whole reopening story in China. What's your view on this, and how should investors read into it in terms of Asian markets?
Well, the way we look at it is we admit that China reopening and all this impetus for it to put through economic stimulus, and we'll hear more about this because the Economic Working Group Council is going on right now. We will hear more of this coming through. So all this in terms of the cyclical trajectory or the cyclical direction of travel should be positive. However, there is a lingering structural aspect to China that would still include risks, and if not, actually be a drag for the rest of EM Asia, including the impact China would have on keeping global commodity prices somewhat more supported, the tensions in the chip space, and also the biggest point about the reopening is, yes, it's a positive, but temper it by knowing that it was going to come through anyway. And in terms of expectations, it may not be as imminent and as big bang as markets are making it out to be. This is probably going to be somewhat more cautious, especially as we head into winter, in the midst of the thick of winter, and given Lunar New Year travel within China might be more cautious about how they reopen. And Chinese tourists coming out, I don't think we're going to swing back into full force, not in the first half of next year. It's probably going to be quite a gradual step up. So those are some of the things that we perhaps add into the picture to nuance and temper the view.
Now, that sounds like a much more measured perspective compared to a lot of other bullish views of analysts, and we'll take note of that, Vishnu. Now, Looking ahead this week, what are some key data points besides obviously the FOMC meeting and key events that will shape investor thoughts and markets this week?
Yeah, the truth is, Brian, I don't think investors have got much time to think this week. It's one knee jerk after another. So right after the Fed, as they're trying to, align their views on where peak rates will be, how long rates will be kept up, and then that cascading down in terms of US Treasury yields and the dollar, whether it's oversold and things like that. Even before they can get their head out of that mess of things, they'll be hit by an ECB. So the ECB and the Bank of England both on Thursday. So Thursday morning we will receive our Thursday morning we get the Fed's decision, which is Wednesday their time. Thursday, going into the European session, you'll have the ECB and the Bank of England both set to hike by 50 basis points. What's important would be the communication around what they have in terms of the bond purchase plans, as well as other aspects of how they're looking at inflation, whether they're going to continue to be hawkish or not. These will, of course, have an impact on the euro and sterling. Ordinarily, a 50 basis point hike followed by any hawkish comments should see the euro and sterling head higher. But in this case, because it's coming on the back of a Fed that might have just delivered a little bit of a hawkish jolt, I think markets may be in a state of flux and perhaps volatility. The worst case scenario is turbulence, of course, but what we are really looking at is a lot of two-way action between greed and trying to square off positions for the end of the year, saying, okay, hang on, let me just take profits and get out of this space because there's a lot more to be unpacked. And one last point I wanted to make is hawkish ECB traditionally used to be correlated with a strong euro. This time around, it's not so clear-cut, primarily because of the pressures between the core Europe and the peripheral Europe, which is shown in the spreads between Italian yields and German yields. The more the ECB hikes and tightens, the more this fragmentation risks appear, in which case the euro will then suffer a loss of confidence and hence weaken, not strengthen. So those things can complicate the dynamics that one would ordinarily anticipate.
Vishnu, as always, thank you very much for your insights. Thanks for coming on the show.
My pleasure. Thanks for having me, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.